Yesterday, we got earnings results for 3 of the Magnificent Seven companies, and the results were notable. Here's what's happened. If you're not familiar with the term, the Magnificent Seven is a group of some of the largest household names in the modern tech space. These 7 companies are Alphabet or Google, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. After market close yesterday, Google, Meta, and Microsoft announced their earnings results to mixed responses by investors. So let's start off with the positive. Google's stock enjoyed a strong day of gains as the company beat both earnings and revenue estimates by a long shot. Those wins included a new all-time record for Google's revenue, recording $100 billion between July and September. Unfortunately, that's about where the good news ends. Diving into Microsoft's earnings, they beat both earnings and revenue forecasts and increased both figures from their previous quarter's report. So why did their stock price decline? The reason is the unfortunate timing of a severe outage of their cloud computing service, Azure, which impacted both businesses and consumers alike. Unsurprisingly, investors punished this outage, with Microsoft's stock falling 5% since the outage. And finally, we have the biggest news of the day, Meta. While companies such as Microsoft and Google have made significant leaps forward in AI, Meta has fallen behind in performance, but not in spending. Despite beating earnings and revenue forecasts, investors focused on the fact that the company's overall spending has increased by more than double since last year. The majority of that spending has been in expanding their AI capabilities, as Zuckerberg continues to defend the spending as being worth it in the long term. However, many investors appear to be skeptical of his claims, as Zuckerberg has made similar statements regarding the company's push towards VR, which as of today, has racked up a total loss of over $70 billion. With pessimism regarding Meta's place in the insanely growth-focused AI market rising, Meta's stock price paid the price as shares plummeted over 11%. As questions around if AI is a boom or a bubble continue to weigh on investors, recent company earnings have shown one thing. If a company wishes to heavily invest into AI, short-term results seem to matter just as much, if not more, than future aspirations. Follow for more market news and breaking events.